Let's talk about a couple of companies that we've lined up for you on the show today. We have GRO Capital. That's the stock in focus. One of the big winners of 2023, up over 80% in the last year. And to talk about the way ahead, however, we do have with us Shachindra Nath, who is the Vice Chairman and MD of GRO Capital. Thanks a lot, Mr. Nath, for joining in. First, you had done a board meeting and got a resolution to raise up to 100 odd crores with a green shoe option of that being up to 200 odd crores itself. By when do you plan to raise these funds? And with this, what does your, capital ratio look like? And what could be the concomitant impact on growth as a result of this fundraise?
Yeah, good morning. Thanks for having me on CNBC. This resolution is more on a debt public issue, not an equity raise. And part of our diversified liability strategy. We have followed the liability strategy of not borrowing just from the term loan from the bank, but now we are seeing incremental borrowing from global DFIs, like FMO has given us money. And this is part of that wherein we will be doing our fifth public issue of the debt. We have filed the prospectus with the stock exchanges. And as soon as the approval comes, we will decide the timing depending upon the market conditions.
So what exactly is your current borrower mix, if you could tell us? As in, where do you borrow from, that is? And how is that likely to change given your diversification program here? And is this because of the recent notification that came in from the RBI?
No, actually speaking, if you know this, ugro is relatively a newer entity, started as a listed startup in 2018. And we immediately after our start, we saw the crisis of IL&FS, the DHFL, and since then, we have followed a very unique diversified liability strategy. Of the 8,300 crore of total AUM, 50% of that is now coming through co-lending. We are India's largest MSME co-lending lender with almost 10 banks as a partner to us. We have around 60 plus lenders. 38% of our borrowings come from the banking institution. Large NBFCs, SFBs also are lenders to us. We also have deep and root in capital market borrowing. We are fairly uniquely positioned wherein almost every global financial institution, which is development financial institution and multilaterals are lenders to us. So overall, I think so this is what has augmented our growth because we are not dependent upon one segment of the liability on which we are heavily dependent. And also we have sweat our balance sheet far better because of very deep focus on the co-lending, which we think is the future for NBFCs in India. Because given the constraint which banks have in terms of their onward lending to NBFC, their capacity of liability or the liability engine gets supplemented by NBFCs like us when we partner with them. So I think so that is what have been our strategy, and that's what has led to the significant growth which we have seen in last 2 years or so.
Okay, Mr. Shachindra Nath, good afternoon, and thanks a lot for joining in on the show. Appreciate your time here. Tell me, because of the recent changes that we've seen from the RBI, is there any kind of change that you would see in your business? Will the cost of borrowing go up? And in general, what is your expectation because of it?
Generally speaking, I would believe that there will be some slowness which will be there from the banking institution to the lending to NBFC. And that would be more towards the larger NBFCs, which have been large consumers. So 80% of the bank borrowing is consumed by AAA and AA and public sector-led NBFCs. With respect to our business, we have multiple levers to offset even if the term borrowing from banks slows a little bit. Where anyway, we have only 38% of our borrowing from the banks. But we have this unique leverage of the co-lending side, where we can increase our funnel on the co-lending side. So we have been stable with at least 4 banking partners, and we have pipeline of another 5 and 6. And some of that we would be starting during this quarter. We have largely been partnered with public sector banks, but now we are starting with few private sector banks as well.
All right. I remember you did say that you have a target of 9 to 10,000 crore worth disbursements in FY24. 9 months into this fiscal, where does that number stand? And what's your prognosis for FY25?
Look, I have always said that unlike most of the conventional company, we put out a very big number for ourselves because we believe unless we don't put a large target, we won't be able to achieve that. Broadly, we have been in line with that. From a 7,600 crores of AUM, this quarter we should be at around 8,300 crore AUM. So we are seeing steady growth. Our capacity is around 550 crore a month, and we have been rolling that capacity. So we should end between that 9,000 to 10,000 crore, nearer to lower side of the 10,000 crore target, which we should achieve. Yeah, but more so, I think so the strong profitability growth which we have seen from 7 crore PAT in 22 to 40 crore in 23, and our target of 120 plus crore we should be able to achieve. This would lead to achieving of our target of around 16 to 17,000 crore. We are now seeing increasing our capacity in terms of our physical infrastructure. So 75 new branches we are rolling out, and we are entering into the segment which are much more granular and retail. We have a very deep focus on our retailer financing business, our rooftop solar business, and we would like to be India's largest MSME financing platform in years to come.
Okay, all the best. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV 18. That's ugro Capital.